set. All engines go. Welcome to the angle. Let's start the show. Hold on tight. The stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle. No time to delay. Markets rise and markets fall. Atomcash is ready to answer the call. While the bulls charge hard and the bears dig deep, the angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Atomcash, and I'm bringing you the firepower that your financial life may have been missing. Now, whether you're new to trading or a trading savant, I aim to turn complexity into clarity with a shot of adrenaline. Now, today we have a thunderous lineup of segments for you all to bring you as much information as quickly as possible, as per usual. So, today we're going to get into some live trading and market analysis. As usual, we'll do some pre-market analysis, look at what's coming up on the docket for today. Most importantly, at 10 a.m., we do have JOLTS. That's the theme of the stream, as you can see, and that is going to be a big data point, so we're going to talk about that in a little bit. Also, I originally had scheduled the Bear and the Bull segment, so for those of you that watched the show in the past, the Bear and the Bull basically highlights a stock and shows the bull side of a trade and the bear side of a trade, so both sides of an argument where it's evenly matched. That was originally scheduled to be on AVGO, or Broadcom. We're going to do the same thing, but probably not going to siphon it down to the Bear and the Bull. It's more than likely just going to be more of a ER technical analysis, looking at their chart. So it's not going to be exactly what that segment normally is, but we're still going to do the same thing, just kind of focus on the technicals and not really give you a Bear and a Bull line. You'll see why. So that's what we got on the docket for you today. Basically, two things you really got to be aware of for this week if you are especially a day trader or swing trader. The JOLTS, obviously, we'll talk about that. And AVGO's ER, which we'll talk about, very important this week, especially with where semiconductors are sitting. So if that interests you, make sure you stay tuned to find out what all of that means momentarily. Now, let's quickly go over the docket of things that we have coming up in terms of news catalysts for the day. Obviously, as I've alluded to 4 times already, we have JOLTS. So that's 10 o'clock. That's the big one. So expect some level of choppiness. We'll talk about the SPY in a moment. But expect some level of choppiness, especially before that data point. It's a big data point, so be aware of that. Throughout the rest of the day, you've got some Fed speakers, which I alluded to yesterday. We did the week ahead, and that video is up on my YouTube. So if you want to check that out, feel free. It's a cut from the stream, so you can just watch that. It gives you the whole highlight for the entire week. But I mentioned yesterday we have a bunch of Fed speakers speaking today. Goolsby at 12:45, Cook at 1, and Logan at 3:30. Yes, 3:30. But outside of that, pretty calm day. JOLTS being the big thing, and then the Fed speakers obviously can say something that can move things around. Now, that's what's on the docket so far. Whether or not somebody wants to come out of the woodwork and decide to speak or schedule a conference or sign executive orders, we'll find out. That's part of the fun of trading every single day. But so far, I don't want to say it looks like a calm news day, but it's looking like outside of JOLTS, a relatively cool news day after we get that catalyst, which is good to see. This just popped up on my docket. It says Trump's offer request declined for tomorrow. I don't know what that is. I'll look into that later, but okay, we'll look into that later. Anyway, let's look into the market. It's 9:21, so let's get you guys set up for pre-market here. Looking at SPY right now, we're sitting flat. We had a marginally up day yesterday. As I said to you guys yesterday here, let's actually go on the 5-minute and we'll look at yesterday's chart. And if you were here, we traded, we did some live trading. And I mentioned how we were more than likely going to stay in this range for a good chunk of the day. And we really did until we got this break here around 1 o'clock and back test here around 2 o'clock. And had a nice little rally into the end of the day, closing around another key LOI, this 592.65. I give you guys these lines that are very important. They're very easy to put on your chart. You typically, not always play them level to level, but depending on your technicals and depending on volume, you can kind of get an idea of which way the market's going. So make sure you have these levels on your chart. But we had a decent break yesterday after that retest here around that 2 o'clock. Had a nice little, what you're going to want to see as a bull, you're going to want to see a break and push above this throughout the day. But I would be very aware, obviously, of getting some level of a cool off or retracement, back testing not only pre-market lows, but that key area from yesterday as well, before JOLTS. So it's not necessarily that I'd want to take a short. In fact, I'd probably remain flat until JOLTS, unless I can get a risk-free position either which way, which means I can get, I have an opportunity to get a quick technical reversal, maybe make about 10, 20, 30%, and then leave the rest on with like a stop loss or just runner size, where I have no exposure of losing money. I made more up on the gains that I made. So if that opportunity presents itself, we'll do it. But if it doesn't, then I would probably, at least where we're sitting right now, definitely consider being more risk off into JOLTS at 10 o'clock. Now, we focused in on this range, and we are near the top of that range as well. A lot of key catalysts this week, not only with Fed speakers, with AVGO, with JOLTS today. We have non-farm later this week, so we've got a lot of key technical information coming through this week. It would surprise me that we push prior to all of that coming through. Like I said, the best case scenario for bulls and bears, really, so no matter which way you're on the coin, in my opinion, the best case scenario is for the SPY to really kind of hover around 589 to 586 into the end of the week. For bulls, it's going to allow more of a cool down and having a more substantial leg up. And for the bears, gives you a little bit more of an opportunity there to enter in with more confirmation, again, looking more on your intraday charts, that a downside move could be coming. So either which way, of the coin, I'd rather we pull back and kind of chill there until the end of the week and let the news disseminate versus getting a push beforehand, which, hey, if we get a push beforehand, not going to be mad about it. I'd obviously prefer the market going up and down. But where we're sitting, I would definitely be very cautious on the long side. Obviously, around this 592.65, I mean, you don't need to be a technical artiste to see how, on these are daily candles, mind you, some level of resistance here, right? 1 day, 2 day, 3 day, 4 day, 5 days, 6 days, call it 7 days in this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 day range. Over 50% of the time, we're rejecting near the top of here. You have that 8 EMA riding up and pushing the market up, so there is some momentum here. You're above the POC. Volume's pretty good, so there is a case both ways, but I would be very cautious, especially with what we have going on this week. I wouldn't necessarily be chasing, especially on the options side of thing. I would look more towards equity and see if there's maybe opportunities there. In terms of the VIX, we're back under 19, which is great. I talked about that yesterday, about how we want to see a substantial move under 19, especially if you're a bull, and how we really want to monitor volatility this week heading into the rest of the week. We want to see that volatility come down and the market mostly stay sideways to up if you're a bull. Like, you don't want it to go up too hard, but seeing that volatility decay as the market goes sideways would lead to a more of a cool off and getting a stronger leg up, a more sustained move to the upside, at least in my opinion. That is also supported by a lower VVIX and IWM. Nice little hammerish candle yesterday, nice like wick below, closed higher. Great little move there. So sentiment's moving in the right way, volatility's moving the right way. So today, if yesterday was leaning 60-40 bull, today we're leaning 65-35. So we're leaning, 35. We're leaning a little bit more bullish, but again, with the data and where we're sitting on the SPY chart, that wouldn't necessarily make me want to just go all out on a long position in general. We'll talk about AVGO specifically and its relation with the SMH, so that's your semiconductor ETF, or one of the semiconductor ETFs, to get an idea. And there's a few things I want to talk about on that, so make sure you stick around for that. We'll do that around like either right before JOLTS or right after JOLTS, depending on how the market's moving. But there's a few things I want to talk about there that kind of give you an inkling of how AVGO could really affect not only the SMH, but the overall market in terms of sentiment specifically. And I like to talk about sentiment a lot in this program because it's something that we don't really focus on. A lot of the people, myself included, are very technically driven. You know, we trade the charts, we look at these lines, we look at these areas of volume and whatnot, but we also need to understand, outside of there being algorithms trading the market, there are human emotions involved. And when people see something go a certain way, and obviously we can get inklings from the chart, we get hints from the chart of obviously being under a key level, being under the 200 MA, everyone's got the 200 MA on their chart, they're going to behave a certain way. It's the same sort of thing with just looking at general sentiment and general human emotion. And I don't think a lot of people online and the community in general focus on how to not necessarily predict human emotion, but see how people could react. And a lot of what I say isn't supposed to be, again, things are definitively bullish, definitively bearish. The way I like to look at things through an angle that was very successful for me is, should I be risk on, should I be risk off? And that's what I like to portray to you guys as a different way of thinking, not bull, not bear, but risk on versus risk off, because that allows you the opportunity to be bullish and bearish, but understand the risk in both ways, right? What is more favorable for me where I can still preserve my money, but make a gain? That's what's most important long term. Looking at the Qs, we're up a little bit in pre-market relative to a red SPY in pre-market. Again, marginally, we're pretty flat in the open here. What I like most about this is that we're seeing the Russell actually up 0.45% in the pre-market. So we're seeing some strength in your small mid-cap companies. You saw some news come through with a lot of the nuclear companies. So you're seeing a nice little rally there for those of you that trade like OKLO and what are the other ones? All of them, SMR, etc., NNE, LEU, etc. They're all getting a nice little move here in the pre-market. So that could be, some of these companies fall into that mid-cap, small-cap bucket. So getting that hype and the retail hype behind it's going to push up your Russell a little bit. That's why I say I like to use that as a sentiment driver. You're seeing a lot of news come through with like uranium as well, which is the same realm. So you're seeing some positivity come through in that sector. In general, which I'm speculating is what's going to be pushing up the Russell here in the pre-market. Let's take a look at our sectors here. We got 1 minute, a little bit less than a minute here. So quick little look at the sectors and we'll pop back to the market. Utilities up big. Energy, right? Makes sense. Energy's flat. I said energy. Utilities makes sense. Energy pretty flat into the open. Staples flat. Tech flat. Where's our weakness? Retail. Real estate. And that's about it. So real estate, comm services a little weak, but a lot of strength here in utilities in the pre-market. Big gap up essentially to the upside. So we'll see how everything holds here momentarily. The market is about to open, so we'll see if we have some opportunities here to potentially take a trade. But like I said, that 10 o'clock JOLTS is going to be a big one, and we are sitting right near this key area. I don't want to say resistance. I don't necessarily want to say support because these things can flip, but it's a key area you need to pay attention to as you trade. And we're trying to push right through it into the open. The market is now open. SPY getting a little excitement here right out the gate, pushing right through. Are we over yesterday's high? No, not yet. Look at the pre-market high, 593.47. Let's see if we can crack. I'm sorry, that was after hours high from yesterday. So let's see if we can crack over that to get some continuation here right out the gate. That'd be really nice if you're a bull. The best case scenario if you're a bull today, rally at the open. JOLTS is bullish and you keep rallying. You just have a trend day to the upside. That would be the best. Mr. Miyagi, risk on versus risk off. I like this. Thank you, Brandon. Yeah, it's a better way, in my opinion, of looking at things, because you get too... It's very easy to fall into the trap of being too bullish or too bearish on a name, or thinking, if you're thinking I'm a bear or I'm a bull, or you're looking at the stock more bearishly or more bullishly, you fall into the trap of not allowing yourself to be incorrect, right? And a lot of trading is the humility and the acceptance of saying, like, all right, this time I'm wrong, right? Or I have the ability to reposition. And you see me on this program, if you've been watching, there's times where I get a trade wrong, and it's wrong, but what makes you a good trader is admitting when it's wrong, right? So and admitting where the risk turns against you. Like, all right, now I'm wrong. Like, now the risk is against me. Let me salvage my money. Let me reposition, flip the coin, whatever. I think that is a more sustainable way long-term to be a better trader. That's just my 2 cents. Market did not break that after-hours high yesterday. I would be tempted to take a short, but I'm not going to. You could, if you wanted to, take a short, risking that after-hours high from yesterday. Again, that was 59347, I believe. Yes, 59347 as a hard stop. But I'm sure IV is blown out. Let's see. We're at 592. Oh, actually, IV is surprisingly low. We're only at a 22 on the IV, which is still high. Don't get me wrong. Like I said, comfortably, IV should be in that 15 to 20% range on zero-day options at the money. We're sitting 22, which I say is low, but that's because recently IV has been up a little higher. It's been around like 26-ish at the open. So we are relatively low for what we've normally seen on SPY. I guess that would have been a good short, but hey, is what it is. We'll see what happens here. I would more than likely assume we'd probably stay north of around this 592.51 and south of 593.47 pre-JOLTS. That would make the most sense, where we kind of just stay. It's a decent range, actually. That's a $2 range, so you could scalp that if you wanted to. You got a decent range there. But I find it hard to believe that the bulls are going to crack this 592.65 and hold it, which means you get like about a 5-minute break plus volume before JOLTS. I would find it hard to believe. And then also we just highlighted on the daily chart how that area is kind of like a supply, right? It's kind of a resistance point, so you want to be able to be careful there. So we'll just monitor this for the time being, and then we'll see where we're going to go here momentarily. Now, guys, as I like to do, and I like to plug at least twice a stream, this will be the one time. No matter where you're watching, please do me a quick favor. Like the stream, drop a comment, subscribe, follow me, whatever platform you're on. I greatly appreciate it. I'm a very small fish in this pond, and it helps me grow, helps the algorithm. I know I hate it when I'm watching streams and they ask me to do the same thing. Some of you may be at work just listening in your pocket, but take those 2 seconds. It really helps me out, and I greatly appreciate it. I will only ask you twice a stream. This will be the one time. I'll ask you again at the end, and then I promise I won't badger you for it anymore. So if you could do that favor for me, I would greatly appreciate it. And if you subscribe on YouTube, I'll give you a quick shout out. So, because I get a little thing that pops up and tells me when you're subscribed. So if you haven't subscribed on YouTube, go check that out, drop a subscription, and I'll give you a little shout out, as long as your name isn't something either bad to say or I can't pronounce it. All right, we are under that LOI here. We're going to flip through our Mag 6, as I like to call them. And some people, I got a comment the other day about how I don't like Netflix. It's not that I don't like Netflix, it's just I find it more relevant to focus on the other 6 companies in the Mag 7. Me personally. You can do you, but I like to focus on those other companies. So it's your NVIDIA, Apple, Microsoft, Google, Amazon, and Tesla. So I want to wait another minute or two just to see how we react to this LOI here. We're not breaking it. And then I want to flip through our Mag 6 and just kind of see where we're sitting into data, essentially. Like I said, we're more than likely going to hold this pre-market low, so your 592.52, and the after-hours high from yesterday, 593.47. So a few pennies above high a day as it is right now. I would be surprised if we break either which way prior to data. The market's probably going to want to get positioned into data. We're already seeing volume drop. Keep an eye on your volume here. Look at the volume dropping already. Remember, one of my rules for day trading, 100K on SPY or less per minute. Midday, I lower that a bit to like 80K. So it depends on, obviously, where the market is. But 100K or less per minute, or 500K or less per 5 minute on the SPY is kind of my barometer for safe volume to trade, where there's enough market participants in the market where I feel more comfortable trading. I can get in and out. I know moves tend to have some validation behind them. What you don't want to see is a lower volume move, because we talked about this in the program before. When you have less volume, there's fewer participants. If there's fewer participants, you can get blown out of your position either which way, or nothing happens. So it makes, again, we're focused on risk on versus risk off. That's a risk off feature. Less volume, I don't want to be involved. It's harder for me to get out of positions, right? Doesn't mean anything if you made money on paper if you can't sell it to anyone. If you made an options trade and there's no one there to buy it, you guess what? You just have a piece of paper and no money. So you want to always make sure that there's someone there to buy when you're willing to sell, and vice versa. Looks like we're holding the POC that's developed here on the day. That number's 592.36. Wicking around it, so we might actually hold a tighter range here. 936, we'll pop back to the spot here momentarily. Let's take a peek at our market internals. We'll check the sectors in a second here. NVIDIA currently trading 138.46. We're above my bull line, like I said, or have been saying since we did the NVIDIA earnings recap. We're not above the point where I want to be bullish, which is very different. So it's a 141.36 area. So interesting spot here, especially with how the SMH is sitting and heading into pre-AVGO earnings. Apple, very volatile here at the open, about a $1 range already, which is actually really interesting on Apple. The bulls are really trying to kick it in. If you've been watching the program, you know how I feel about Apple here. I would be very, very careful. Unless we see a nice little volume pump here on the 30th. You saw almost we wicked this LOI here, this 195.83, which is really like my, if we break this, we're going down if bulls can't recover it. We saw a nice little wick with volume. So the bulls are really going to try to turn this one around here. That follow through's got to come through in the next week or two. Otherwise, you're going to make another lower high essentially, and then push to break this and break down. And again, my target, if we break this 195.83, and I will probably open a swing short, which is something I do very, very rarely, is getting down to this high 170s, mid 170 area. You got a good cluster here, if that happens. But just as likely, the bulls could turn this around here. They would have to do so in again, 5 to 10 days, very short time frame here to actually get a rally and get a true reversal out of this gate. Ooh, if you've been watching, we've been talking about Microsoft. Microsoft wicked on the daily, right? Or on today's candle, I should say. Oof, look how close. All-time highs was 464.79. About 50 cents off at the open of all-time highs. If you've been watching, I am biding my time. I'd probably look for a call credit spread up here versus a directional put. Unless, again, technicals say otherwise. But with the exception of this volume on the 30th, volume's been slowly tapering to the downside as we're grinding higher and not really getting too much strength. That's one of the things I personally look for, especially on a short side trade. If volume's going down and price is going up, that's very indicative of a potential reversal. Vice versa too. If volume's going up and wait, hold on. If volume's going up and price is going up, there's a lot of strength. If volume's going down, there's fewer participants, fewer people interested in buying and selling at that price, and the price is going up, it's got to come back down. I'm very interested in this Microsoft short. We almost wicked that. I would probably start a position when we tap the all-time highs, depending how things look, unless we break that with volume and follow-through. Meaning, we break it, we push up, we backtest and retest this level and push again. That's what I would need to be a bull on Microsoft from a technical point of view. It's a crazy rally with a gap up on a good earnings, mind you, so it wasn't a bad reason. But this rally has gone on now for 50-ish points. Volume is tapering again, with the exception of the 30th. Volume is slowly, your VMA is tapering. It's been averaging around, let's see, 30 million volume, 20 million volume. Now you're getting into 18 and 17 million volume. So it is decreasing. Be mindful of that. I know a lot of you probably are long Microsoft in one way or the other. Google's actually being a decent disappointment to me here. Ever since it broke that 200 MA, we're coming back down. You're going to want to see the bull step in right around here. And again, I'm long Google over 162.64. If bulls don't step in around this 165, basically where it is, this 165 area, I mean, you got decent support here in general. It's got to basically stay above my entry point. If it goes below my entry point, then I'd more than likely consider an exit on Google, especially with how Apple and Microsoft are sitting, right? Because birds of a feather flock together, whatever. If these names get some level of bearish action, Google could get you that attention as well. So you want to be really mindful of that. Amazon's been looking solid north of that 211 cent area, so it's still looking pretty decent. Kind of have a little mini inverse head and shoulder here on the daily, little shoulder action, head down here. It's looking pretty good, actually. I like Amazon the way it looks right now. And I'll remind you, and I'll continue to remind you, as long as you watch this program, if Tesla cannot push through 360 with volume, it is bearish and I would not touch it. well, let me not say it's bearish. It's risky to be a bull. You phrase those words very carefully. If it can't get through 360 with some volume and push all the way through like 380 and get over this like 386 area, I wouldn't touch it. There's a higher probability of it going bearish. So as we look at our Mag 6s, I like to call them, things lean more bearish on the daily charts than they lead bullish. So that is, again, another one of these risk factors. When I say where the market's sitting, you don't necessarily want to be super aggressive just because there's an argument to be made both ways. And I'm sure you could find bull arguments just as well as you could find bear arguments, right? Ooh, I popped back on the SPY right on time, breaking that LOI with good volumes. This is what you want to see as a bull. Look, we broke the red SAR here. We talked about the SAR on the program, right? TA with AC. Nice little episode of that. We're breaking the red SAR here. So what we want to see is follow through on high volume. So you had a break with high volume. Broke the SAR on high volume, broke the LOI on high volume. This is a very bullish sign if we can break that after hour high, that 593.47. That'd be a really good sign pre-JOLTS. And if JOLTS is bullish, then you're going to have a really solid rally day on the market, which would be great. You could break out of this range today. If those things, all those things have to happen. Everything I just said has to happen for that to happen. So I wouldn't get too like, oh, Adam said buy calls. No, I didn't say buy calls. I'm just saying these are the things you want to look for if you want to be a bull. You made a new high there on that candle. Let's just watch the SPY here and see if we can crack that after hours high here. We have really good volume. So volume's tapering to the upside here. We're getting some push. So we get good follow through. You're going to want to see the next one or two candles either get direct push or we come back test above the LOI would be ideal. Back testing 592.74. And then rally would be nice to see. How's our 5 minute looking? Volume's not atrocious. It was bad there for a minute, but volume's picking up a bit. It's good to see. Let's see what happens here. And then we'll check out our sectors. Let's see what's going on around the market and get an idea of how things are leaning or where the strength and or weakness may be in the overall market. Here's your back test here. Part of me wants to get long for that break, but let's take a peek. How much are 593s? $1.30. No. I don't think it's going to go. I think it's going to I think it's going to come even lower and back test this point of control. I don't think we're going to break it before 10. It's good if it holds right here. And if we see volume, especially on this candle, but the risk isn't worth it to me. So again, we're talking risk to reward, right? If I want to grab a 0 day here, and I said, okay, I'll look at the 593s. At that point in time, they're about $1.30. The delta, hold on, let me pull this up. So let's do a little lesson, a little education lesson. The delta on these is about 49 cents. So that means for every dollar the SPY gains, those contracts, in a conservative sense, so we're going to assume there's no delta appreciation. Delta appreciation means obviously as the call moves more in the money, the delta increases. So we're going to assume there's no delta appreciation, just to keep things like super basic. Why can't I pull up regular SPY? SPY. Okay. So if I got in on those 593 calls at $1.30 with a 49 cent delta, I would want to trim around or near the high a day or around where after hours, that after hours high is at 593, whatever it's 47, 43, whatever it is. The point of time SPY was trading 592.74. So doing some quick math in my head, I understand that I'm probably going to be able to capture maybe $30, $20 to $30, depending on IV and other factors, right? But we're looking conservatively just at delta appreciation. We'll see how right I am too. If we get there, we'll check. But I'll be able to capture around $30 in value, meaning we'll go from $1.30 to $1.60, assuming we tap that after hours high. Now, the downside risk, if we broke that level, and if this POC didn't hold, we'd more than likely come down to here, this 592.36, 592.24, and at that point, my risk to reward basically is like a 1-to-1, where I could lose about 30 cents in value, 20, 30 cents in value to the downside. So I kind of have a 1-to-1 risk to reward, but specifically with a 0-day option, I have theta on my side, plus I know I have news in 14 minutes. So if I'm switching gears, and I talk about this a lot in our community at Exclusive Trading, I have the ability to switch gears and understand like scalping mentality, day trade mentality, intraday trading, short swing, long equity, etc. You want to be able to switch gears. And now if I'm focusing solely on a scalp mentality, I need to get the move right away to make it make sense, or I need to understand how much time I really have to play with. So understanding that I have 14 minutes to play with here and how much volume's condensed in this zone, unless I'm expecting IV to pump into the news, which it probably isn't. Let me just verify. IV is at 20. So actually IV is dropping. It was at 22 earlier. So unless I'm anticipating IV to go up, which would help appreciate my contracts, I run a poor risk to reward setup here where unless I'm really in and out very quickly, and we saw these contracts go up to 140. Now, look at this right now. This is actually a good example. We're back at the 130-ish entry, and the SPY is up another 30 cents from that original entry. So now you can even see the effect of theta super short term. Where this was 3 minutes that I've been talking, 3 or 4 minutes, where you've lost value here just in that short span of time. So depending on your game plan here, unless I was anticipating that after hours high break and pushing further prior to the data, then it really wouldn't be worth the risk reward, at least on a 0-day contract, because the opportunity for me to lose value due to theta in that time or push lower, and now I've lost both intrinsic, well, technically I don't have intrinsic value because it's out the money, but I'm losing more extrinsic value plus getting theta decay plus getting IV decay. I've got 3 things working against me if I'm trading a 0-day option. Does that make sense? Let me know in the chat if you guys enjoy the little educational spiel of a breakdown of a trade there. Because normally I try to give you guys the information to make the trade yourself, or at least know what to watch for. But I want to break down my thought process for you, again, from that risk perspective, so you can understand where the risk to reward is and if it even makes sense to take the trade. So even if I had a decent probability of being successful in the trade, is it worth how much money I could make versus the capital I'm putting at risk? Things to consider. So let me know if you like that. We could do more of that in general on the stream, and I'll be sure to kind of break down things that way you guys can kind of... I like to challenge you guys to come to this program, not just watch me trade, right? But to actually try to learn new things and things that you could apply to your own trading. Please excuse me for 1 minute. My dog is being very annoying, crying to go outside, so I'm going to let him outside. So hang on 1 sec. I love that dog, but it's for some reason. So if I'm live streaming, specifically if I'm here at my desk and I'm live streaming or I'm on the phone, he will come into the room and just go, ho, 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 and just start to kind of howl very quietly behind me. And it's almost like when you're in school and the kids go, I'm not touching you, I'm not touching you. So he and he doesn't even want my attention. He just wants to go outside, and then he doesn't want to do anything. He just stands there. So he's a great dog. I think he just likes to mess with me when he knows I'm working. All right, so SPY hasn't really moved here. Those contracts, we're just going to monitor this trade and just kind of see how it would have worked out if I did decide to take that trade. If I did, those contracts reached about a $1.40-ish. We'll call it $1.42 because it did go a little higher there. So far that would only be 9% gain, which is typically where I take my first trim. I typically get a good trim off at 9 or 10%. So not the worst in the world, but you're seeing now how this area up here is acting as like a decent supply, a decent resistance here, and we're not getting that follow through. Now, again, look, these contracts are $1.30, and the SPY is now 30 cents higher than what would have been my entry, right? So you're seeing decay in real time. And I'm trying to focus in on this because I had someone send me a message yesterday, 2 days ago, about they want a 0-day trade more, and they don't understand why they should or shouldn't, etc. Oh, here, look at this, boom. 120, 125, back to the LOI. So I would have lost 10 cents of value, and that's at where, again, theoretically, basically where I was looking to enter, or where I would have entered at around 130 would be at 592.74. So now we're now, again, 20-30 cents higher, and we've lost value. And actually, I want to see if the delta has changed at all. Delta's dropped 2 cents as well. IV is the same. So you're not even getting crushed on the IV yet either. Interesting. I think I'm at a weird point because I want to do AVGO, but we have 9 minutes to JOLTS, and I obviously want to watch the market when JOLTS goes off and kind of cover that. So, can I hammer out AVGO in 9 minutes? I think I can. All right, we'll make it a quick one. Let's go to AVGO. All right, so some of you may be thinking about trading Broadcom or AVGO into their earnings. Whether you're a bull, whether you're a bear, doesn't really matter. What I want to give you is at least the technical levels for you to be mindful of if you do decide to take a trade. Now, what's really interesting about AVGO heading into earnings, I mean, you want to look at this chart real quick. It just, actually, today, right now as I'm talking, it just made a new all-time high as of today. So, we're breaking all-time highs into its earnings, which I believe are on Thursday. Yes, so they're on Thursday. So you have this video, this discussion at least 2 days before earnings, so you can at least sit with it and think. Big move. You're breaking over these key levels here and pushing to the upside here. Brand new all-time highs heading into earnings. With everything going on in the world, Broadcom doesn't seem to really be affected. Now, you're going to want to obviously pay attention to, and in general, what I also want to highlight is your SMH, which is your semiconductor ETF. So if you are a bull or if you are a bear, and if you're just investing in the market in general, what you want to be mindful of is the fact that how strong AVGO, so let's look at, this is the monthly chart, it's crazy. And let's look at the monthly chart for, actually, let's go weekly. Probably give it better. Okay. Look at your weekly chart for your SMH and your weekly chart for AVGO. And you'll notice, and we can get out the roll tape here and measure, but you'll notice AVGO had more of a percentage gain over the SMH, which you may think, well, why does that matter, right? And this is for general market information. And in fact, you could say, like, SMH really kind of has been bearish ultimately since around 2024. I mean, yeah, you had sideways chop, you had the tariff drama and whatnot, while AVGO did also kiss some of that bearishness, but today, recently, it's making new all-time highs. And the rest of the semiconductor industry really isn't pushing as hard as AVGO. So why should you care about that? Well, you should care about that because if AVGO, for whatever reason, has their earnings and it's deemed bearish, and again, we talk about this all the time where things are deemed something. So it's not necessarily bullish or bearish. Their information could be fantastic, but if it's just not good enough for what the market expects, or they guide down because they see future issues in their pipeline or whatever may happen, that could obviously affect the stock price. Now, what you want to look at here is the fact that if the SMH has been lacking, and if AVGO has basically been the strength for the SMH, at least in my opinion, when you look at other companies like NVIDIA, which have still been pretty strong, they haven't been as strong, theoretically, as AVGO. If AVGO does have a bearish earnings, the effect that this could have on the market could be pretty bad. And the reason being is that whatever may happen on their earnings, if it is bearish, it could show potential weakness in the semiconductor, I want to say sector as a whole, which could cause a cascading effect to these other companies. Again, if we're just looking at the SMH as a whole, that could be a cascading effect to show potential weakness on other semiconductor companies and semiconductor adjacent companies as well. Your AI stocks, your material companies that provide materials for these AI companies. So you want to be very mindful of that, because if this is the stalwart, the strength in the SMH, and if it shows any weakness, that could be a poor sign for growth. We look at, again, semiconductors as the canary in the coal mine, could be a poor sign for growth in the overall market. Now, that sounds very bearish, but again, I don't necessarily want things to be observed from a bearish or bullish standpoint, but it's more from a risk on, risk off standpoint. So now, let's say you heard what I just said. You go, Adam, I don't care. What do I need to look for if I'm trading, if I want to trade AVGO into earnings? Well, I would kindly suggest you consider being more defensive, actually, if you decide to trade AVGO. Maybe you're already long AVGO, maybe you already have call options, whatever. I would actually ask you consider to be a little bit more defensive, because I would argue going into an ER at all-time highs is not going to be too conducive with where we are in the market and where the world economy is sitting right now for continued growth, at least in my opinion. And I believe the spotlight is on AVGO to hit these strong growth markers that they may not hit. Now, we looked at NVIDIA and we talked about NVIDIA's earnings. That video's up on my channel as well. And I set some pretty high expectations for their earnings. And I made it very clear. I thought they were going to smash their earnings. They were going to beat their earnings. They're going to do fine. But the important thing is, how good would they do? How strong would growth be? How impressed with the market be with those results? It doesn't matter that they had great results. It's, again, what are you doing for me tomorrow? Well, it doesn't matter what you did for me today or yesterday. What are you going to do for me in the future, right? And that's what I want, and that's what I think is going to happen with AVGO as well. So, not necessarily that I'm looking to be a bear, but again, your risk areas that you want to watch out for. Again, these two areas, this old, it's now the old all-time high because now it's the new all-time high. Or, yeah, it's the new, today's the new all-time high. This is your old all-time high, 250.45 and 246.53. You're going to want to watch those areas to hold through earnings. So if you're someone who's trading after hours or anything, you're going to want to watch those two areas to hold into earnings. Next area that could receive a tap on earnings, and we're going to look at expected move here momentarily, is this 229.85. That's a pretty stark fall here. That's, $20, $30, depending on where we get there by Thursday. You could rally another 10 points here before Thursday. So it is a decent move to the downside. Now, I will say leading up into their earnings or leading up into today, we're seeing some strength come in through semiconductors, which is a good sign, especially leading into earnings for AVGO. However, again, if they miss the mark in any way, or at least the market deems that they missed the mark, this could be pretty bad. The other thing you want to look out for, so let's say we tap this 229.85 area. That would be an area to actually consider establishing a long if you don't already have a long and you like the company and earnings were good. So let's say earnings were fantastic, but maybe they said one or two things that were just kind of like meh, and the market didn't like it as much. That would actually be a point where I consider a new long on AVGO. You have decent support there. It's obviously an area of consolidation. It's old resistance, new support. Backtesting that off of earnings actually wouldn't be a bearish thing. It would actually be pretty good. I wouldn't be mad about that. Also allows this crazy rally from 138.10 at the lows to cool off a little bit more. You could argue it cooled as it went, but it would allow this to cool a little bit more. For context, your daily RSI is at 80. It's pretty steep. You do have this gap down here at 215.88 and 209.96. So if you do consider establishing a long at that 229.85 area, maybe put on a tight stop because there is that possibility that bears could target that gap. And that's another area, once the gap is filled, where I would actually consider a long. So let me make it abundantly clear. It's not that I want to be a bear on AVGO. I just think unless they absolutely smash their earnings, that there is going to be more of a bear effect into earnings, unless something, fantastical happens. This is a very hot chart. And if something's white hot, you need to keep heating it up. In certain points, things just can't get hotter, and that is concerning me with AVGO. So all in all, actually, I should highlight this last level down here, 192.19, key area of support. You have POC right below it, and the 200 MA on the dailies there, the 50 MA on the dailies right nearby as well. So for whatever reason, if you get all the way down there, that would also be a spot. So there's different areas where I would actually want to open a new long. But if I'm already exposed long on this name, I might want to de-risk, sell covered calls, whatever you may want to do to get lowered exposure on AVGO. The last thing I'll leave you with, quick calculation, and you should probably do this before their earnings, but you want to look at the money. You want to kind of understand what the expected move is. So for today, right now, we're trading 253, we'll call it 50. Take take both sides of the chain, add them together. That's going to give you a rough, quick and dirty way for you to understand what the expected move is. So you got $9 here, $8 here, we'll call it $19. So your expected move is about $19 either which way, which would line up with that 229.85 tap, again, roughly. So there is that possibility here, especially if it doesn't get follow through today through JOLTS, that could happen. So that's your little summary for AVGO going into their ER. Hopefully that helped. And yeah, if you haven't, like and subscribe. Thanks. Cool, I recorded that. All right, back to the market real quick. We got JOLTS data. I did it. It's 10 minutes, right on the money. Or whatever it was, 8 minutes. Right before 10. Marcel, can you maybe compare it to the NVIDIA chart? Yes, I can. Let me just watch SPY real quick, and we will do that together. All right, we're getting a little price action. Not a lot of volume on this. We already got factory orders through month over month. Slight miss there. Expected was negative 3.2. Actual was negative 3.7. I'm not getting JOLTS data yet, unless someone wants to drop it in the chat if you got it before me. I'm refreshing everything to see if I can get it. We will see here. Come on, load. Someone help me out here. Oh, wait, here we go. We're loading. Come on. Come on. All right, JOLTS. 7.1 million was expected. Okay, 7.4391 million. So good, depending how you look at it. I mean, mixed, I guess, with the factory orders, but overall bullish. More job openings. So looking at JOLTS data, if we have expected number of job openings, we have more than expected. That's hinting that businesses are willing to hire. So if they're willing to hire, the economy's healthy because they have enough money to pay more people. The market should like that. I guess we will see. For me, that's not a big enough beat, but it's also not a miss, right? So that's not a big enough beat for me to get excited on the day. But as I said, if we break that after hours high, could have a good day here. But it's not looking like the market really cared. Looks like there was a lot of build up, good volume there off of JOLTS and factory data, but we're not really pushing either which way. Interesting. All right, let me pull up Marcel since you asked. NVIDIA. So Marcel asked, wow, all right, hello NVIDIA. This is the 1 minute chart. Looks like I missed some fun. NVIDIA liked the news. All right. NVIDIA liked the data. All right, let's hang out. Let's hang out a second. Let's see how this goes. NVIDIA's right by that bull line that I laid out, that 141.36. Now expect a rejection here, especially on this kind of move. I might want to take a... I was going to say, I might want to take a put, actually, just to get the... some level of a mean reversion here. Volume's good, though. It could just crack it. Let's see what happens. I'm interested. My curiosity has been piqued. Let's see, let's see. Got about 10 cents here on NVIDIA if it can crack. And again, this is like my bull line. So over this line, I want to be bullish on NVIDIA. I think NVIDIA could push up higher if it can sustain... Keywords here I'm about to say. It needs to sustain over this level. If it just taps it or whatever, it's still not bullish yet by my metrics. It doesn't mean it's bearish. It's just not... I don't want to have money in NVIDIA yet. Oh man, how close is that? 6 cents. High days off by 6 cents. I am itching to take just a counter short here. All right, I think I might do it. Oh, let's see. All right, I'm going to take a short on NVIDIA. I'm going to do it. 140 short, filled at 166. Hold on, I got to type this out for people in our community. Basically betting that that my key LOI here is not going to break. Even getting a back test here, I wouldn't get greedy. If we can take like 140.70, I could probably walk with a decent profit here. We're 6 cents off that LOI, so we didn't necessarily get a tap, and volume's high here. So bulls could push it, but I'm already up on this 10 cents, so nothing crazy here. The risk reward would favor the bears here, especially if we can get continuation. Ideally, I'd be looking for 140.70 and then 139.94. That also puts me in the money. So we'll see here. Got about 5% on this so far. I also like, again, if I'm being a bear, SPY has not broken that high. So we're still sub yesterday's after hours high. So there's not that follow through there. And the market probably won't get that follow through unless NVIDIA can crack that key LOI there. Let's see, let's see. Those contracts currently at 170. So again, up about whatever it is, $4. Nothing crazy yet. Again, that first key level you're going to watch here for a short-term trade around this 140.79-ish area, so about 10 cents off here. I'll probably look to take a trim anywhere around 180 to 185-ish. 185 would get me about 11%. Just doing some rough math. So somewhere in that neighborhood, I typically like to take a trim around 10%. Now you're noticing two little wicks here, so they could be indicative of bulls trying to push up price here. And you could also argue this is some level of bullish cool down after a strong rally here. But I want to see it come down a little bit more, like 10 more cents or so, and then I could probably fire off a decent trim here. If that breaks with some volume, then it's going to yoink, as I like to say, probably in the money. It's probably going to go to 140 or below. Here we go. All right, I'm going to take my first trim here. It's 10% there. Now, if you're in a smaller account and you want to de-risk a bit, put a stop loss at break even if you like. Especially when I'm short, I like to be very aggressive with my trims unless I have a lot of confidence. I look for very specific things when I want to go short, and I don't like to overstay my welcome. I never, in general, trading bull and trading bear, so trading short and trading long are not the same game. When you are short the market, you have a headwind. You can get squeezed, and we're not talking short equity in this case, it's short an option. But if you're short equity, you can get squeezed, obviously. So you have an additional risk factor versus being long the market, right? So anytime I'm short, I want to be more risk off than risk on. I want to get my money, get out, essentially. However, as you guys know, or as you've seen, bear moves, unless it's a short squeeze, tend to be more aggressive. They tend to come down faster than a bull move. All right, be ready here for a second trim. All right. I've got a trim again here for 13%. No, got a little bit more. All right, filled at 190 and 189 on that. 14% gain. Sorry if you hear me clicking and clacking. I'm typing to the Discord. Which you can get all these alerts all day long in our Discord in our community over Exclusive Trading. Bang, bang. Quick plug. So like I said, I want to see us get in the money here, get under this 140, especially if we crack this green SAR here. That's where I'd be pretty happy on runner size. If we see a wick here, then I'm probably going to want to go runner size early. So one of two things can happen. Watch your volume here as well. So if I have a wick here on higher volume, or we push up here, then I'm going to want to put a stop on and just let it rock. Otherwise, I'm going to want to go runner size, or we're going to continue down to break this green SAR here and then crack sub 140. If 140 cracks, we're going 139.55 pretty quick in my opinion. I think I want to de-risk here though. I'm going to give it another minute. 30 seconds to a minute and see. We'll see here momentarily. I don't like this wick here as a bear. All right, I'm going to go to runners here at 18%. Now I'm going to wait. Stop loss at break even. So what I want to see is a bear here. Push up and more than likely stay under the wick of this candle here at 10:07. That's going to be 140.73. If we stay sub that, then you're going to get basically like a bear cool down. In this case, a short-term bear cool down where it goes up a little bit, comes down, and then does break the low of this candle. You break the green SAR. And like I said, getting sub 140, you're going to 139.55 pretty quick. So we'll see. Pretty tight risk on this. And again, stops are in, so either way, you're not going to lose here. It is a win-win right now. We are riding risk-free, essentially. Oh, hey, X. X is watching, guys, if you want to say hi. Also, X, you saying, I incorporated the LOI, you're right, but I coined yoink, thank you very much. That is mine. I asked for the yoink. I like to say, so for those of you who don't know, in our community exclusive trading, I coined the term yoink. When a trade yoinks, it pulls down, there's a sharp move to the downside, you get yoink, the bottom comes out, right? I coined that, so that's mine, thank you very much. You made the emoji, whatever, but the yoink is mine. Thank you. All right, we're going to be a little bit patient here. I'm debating on moving my stop here to like 175 or 170 just to give me a little cushion because these options can move a little quick. That was a good little short, though. You guys like that? Ones in the chat if you like that. Twos if you didn't and it sucked and I hated it. One way or the other, let me know. I'm going to wait a little bit longer. We got a little bit more push here. Volume's okay. think it could happen either way here. This is why I like when I have a position established and I'm basically like risk free in the sense of if I get stopped out, I get stopped out. But if you get a move, I get a better move and I move in the money, then I have a nice little hoard for myself there. Nice trade. It's my favorite kinds of trades. Yeah, be patient here because now we're getting a wick to the upside. So now selling pressure is stepping in. Let's check the volume when this candle closes out and get an idea. Now you have the PLC here as well. So you have a decent volume shelf here as well. It's a battle for sure. So with my 166 entry, I've got a little cushion here, not much. We got a very small cushion on this trade where I could just get pushed out real quick. In fact, I'm going to close. Yeah, I'm going to close out of this now. I'm going to close in profit here. Bang. Bang, bang. Nice little 18% gain there. My stop may not get tripped, but at the same time, I'd rather... Two things. One, on NVIDIA, I mean, the spread on this particular chain actually is pretty tight here. You got 1 or 2 cent spread. But sometimes, especially if it moves quickly, that spread can widen and I can have a deeper loss. Even if my stop is triggered, I have a stop at 166, but maybe it moves too quickly and I get filled at 160. So that could incur technically a loss for those remaining contracts. So I'd rather be safe than sorry when it could be moving against me here and close out at like 170, 172, whatever it was, and protect that cushion. Not necessarily have any loss on the remaining. So nice little semiconductor short there. A nice little V recovery here. I see a bear and a bull case here either which way, honestly. You're going to want to watch this level. This level is so important to at least me on my charts. This 141.36, again, getting over this is where I want to be a bull on NVIDIA, funnily enough. Right? I want to, again, going back to the daily chart, being over 137.81, in my opinion, it's bullish, but I don't want to be exposed bullishly to NVIDIA. I'd rather, as I like to tell you guys, I'd rather show up to the correct house party late than the wrong house completely and get blown in the face with a shotgun, right? So that's my opinion on that. I'd rather wait till it's cleanly over this level, it's back tested it, then establish a new long, then get long prior and kind of go, it probably will go up, but I'm not as sure. And especially with a company like NVIDIA, I want to be more sure than not. Now let's pop back to the SPY. Man, we are not cracking that after hours high. It is a hard time. I will say, if we do break that this high on NVIDIA, there's going to be a strong possibility we're going to get over that 593.47 area from after hours yesterday. Now, let's look at those calls I was contemplating taking, those 0 days. Now, let's assume I didn't hold all the way to now, but let's assume I closed it out prior to the data at 10, because that would have been the play, right? So let's do a post-mortem. I never took the trade, but we talked about it, right? I talked about entering that trade right here. So the time was 9:44. So between 9:44 and 10 o'clock, that would be the point in which I'd have to establish some level of profit. And we talked about decay and all of that already. So you've been watching, you already know. So 9:44, I said I would have got in on those contracts at around $1.30. So let's see what the high of those contracts would have been past 9:44 today. 950, 945. So at 945, the high on those was 154. We'll consider that a wash because that was prior to that happening. So the high on those contracts really only got to 148. So I'm glad I ran through that risk assessment with you guys because I really only would have made, and that's assuming I got the highest fill, 14%. It's not horrible. But that would also assume I got the highest fill, and for the risk that we were going into data and everything was not worth the risk. So I'm very happy I didn't take that trade. I'm very happy I could walk you guys through it so you understand why I didn't take that trade. Now, Marcel, I'm going to call you out because you said, oh, we're breaking on NVIDIA. We're breaking it. We're trying to. Marcel wanted me to compare the NVIDIA chart to the AVGO chart. Marcel, I will question you. I will ask, are you more in reference to the daily chart, or you're looking more at like your intraday, like 1 5-minute charts? Like, what are you looking at here? Daily, weekly, monthly? What are we feeling here? Oh man, X is fact checking me on the word yoink. All right, well, I'll talk about this later. Listen, yoink is a common word, and we can both agree that we can share it in our own terminology. I coined it for downside moves, thank you very much, and I asked for a yoink emoji and a yoink sticker. So, to be fair, I think I have been the proponent of yoink in our community. If you don't know what I'm talking about, we have a great community over Exclusive Trading where you can get all of our insights, you get all of my trades, all of Exclusive Trades. We've got a great teamwork or co-worker with us. His name's Grumps. He puts out 1,000 charts a day. It's a fantastic community. If you want to check that out, the links are all in my bios. You can feel free to come check us out, and I promise you won't be disappointed. We have a very cool community, great people there as well. Marcel, you're not answering me, so you either stopped watching or you are doing something else. So I will just look at what I assume would be the daily charts. So let's do a little bit of analysis here on the daily charts for NVIDIA, the same way you compared AVGO to SMH. Okay, cool. Thank you for answering. So let's look at NVIDIA and let's look at SMH and AVGO. So we looked at the SMH from 4.7. AVGO, they're all going to look like that low is going to be relatively the same, right? So let's just start off with a comparison's sake in percentage. So percentage-wise, from the lows, NVIDIA moved 63%. And AVGO moved, and this is just rough and dirty, I'm not measuring this exactly, 83%. So AVGO moved 20 more percent for the same period of time. Comparatively, the SMH moved, I'll pick the high here just to be nice, 46%. So kind of backs up again my thesis here where I was saying where obviously NVIDIA is a big proponent of the SMH and worried about short term is because AVGO is so much stronger for the SMH. And actually, let's get more. Let me break this down a little bit more for you. Let's see. I'm going to break it down even more for you. Give me 1 second here. Okay, so Broadcom. So now I just pulled up the holding breakdown for the SMH. So let's actually, we'll throw in Taiwan Semi in there too, just to get like a more full picture here. So Taiwan Semi moved from, I'm gonna be generous there, 48%. So looking at how the SMH is composed, NVIDIA is about 20%, Taiwan's about 11%, and Broadcom's the third largest at 10%. So although Broadcom is half as weighed, I should say, in the SMH, you could argue that if we want to, like, let's just combine Taiwan and Broadcom together, that makes your 20%, right? So if we're looking at Taiwan at 40% gain, we're looking at AVGO at 80% gain. Theoretically, I think what I say, NVIDIA was 60%. Yeah. So theoretically, together, TSM and AVGO create about 60% total gain because they're roughly weighed the same. AVGO has 80, TSM has 45, whatever. So average them out, we're getting roughly 60. And NVIDIA has about 60% gain for the same period of time. So if AVGO does see some bearishness, and again, we're bucketing it in with TSM in this scenario, that's where I'm seeing the risk here for the SMH as a whole for a potential short side move here, where if we see weakness through AVGO, not only is that just going to weigh from a sentiment point of view, but because it is at least 10% of the SMH, and if we're averaging out, we're throwing TSM in there and averaging out, we're going to call it 20% for that argument's sake. If we get that kind of pullback here, where we're dropping, $20-30 here, that could be a pretty stark move on SMH, especially because it's not breaking over this 247.83 and this 249.70 LOIs here. Pretty decent key level. You could also argue that you've got a funky looking inverse head and shoulders going on here on SMH, so it'd be great to see it break to the upside. But it's not getting that follow through. So comparatively speaking, if we're looking at NVIDIA for the same period of time and AVGO for the same period of time, I mean, you can just flip through the charts side by side. You can see how much more of a stark difference in, I want to say, directionality AVGO has comparatively to NVIDIA for the same period of time. Obviously, their market caps are different. There's a bunch of other factors. Market cap on AVGO is 1 trillion. NVIDIA's, what, 3.3, 3.4 now. So it's 3 times as small comparatively. But in terms of sentiment, again, it doesn't really matter much to me because I'm more concerned of how SMH would react as a whole. Does that make sense? If we're comparing NVIDIA to AVGO and I'm combining AVGO with TSM, I know I'm getting convoluted here, but that's kind of how my brain works, so I'm trying to water it down and make it easier to understand. If we're combining AVGO and TSM to kind of get an idea of weight, right, and we're averaging out their percentage gain in the same period of time, it's roughly the same percentage gain as NVIDIA for the same period of time. So now if they're average weight and they're also roughly the same gain, and if there is weakness through an ER with AVGO, then that will drag down the SMH. I mean, it would obviously drag down the SMH, but it would drag down the SMH more proportionately than it would otherwise. Think that makes sense. If it doesn't, you're in the Discord, so you can ask me. We'll get into the weeds together. Ooh, SPY did break that after hours high yesterday, so we'll see if there's any follow through here. I hate this price action. I'll be honest with you, I hate the price action we're seeing in the market today. VMA is starting to tick down after that 10 o'clock news. We got obviously that reaction here, but your moving average for your volume's kind of wavering here. I don't think we're going to get any follow through here. If we do get follow through, we need to see volume like sooner than later. Otherwise, we're getting back under, and I wouldn't expect a crazy move here either which way. It would be a very scalpy kind of day overall. Yeah, you would need to see follow through in the next like 5 to 10 minutes by my summation. Otherwise, I wouldn't be too excited. And like I said before, so if I'm a bull on the day, I would want to see NVIDIA power through the 140, 136 area for there to be any continued upside. And now I want to go short on NVIDIA again. Oh, the temptation. It's cheaper than before. Same contracts are cheaper. I'm going to do it. I'm debating still. I'm feeling like I want to do it though. I hate trading semiconductors so much. All right, I took a small stab at 161. I might add a few more here. Oh my god. Do that, do that, do that, boom. If we tap like these get to like 154, I'll add a few more. I'm not going to change my average, so I don't like furu you guys. I don't like doing that. But I'll add a few more. I'll increase my size a little bit. But as of right now, I'm in on the 140 puts at $1.61. See if this LOI can break here to the downside. And again, this POC, the point of control, break to the downside here. You've got that 141.36 LOI there as your upside risk. Marcel says, thanks, I appreciate your input as always. Let's see how AVGO performs earnings. I agree, my friend. We will wait and see. I think it's important. I think a lot of people, to be honest with you, are sleeping on it. I don't think as many people are paying attention to Broadcom as they should be. A lot of people obviously trading semis and whatnot, but they don't really focus on AVGO in general, right? For some reason, I don't know, it's a sleeper. Guys, I will hang out with you guys for a little bit longer, especially through this trade, but I'll ask you to do me a favor one more time. Again, I asked you twice a stream, so I've got about 100-ish viewers in here. If you do me a quick favor, please like the stream wherever you are. Follow me if you haven't. Drop a subscription. Again, if you subscribe on YouTube, I'll give you a quick shout out. It pops up on my screen now, so I'll be able to see. But if you haven't already, drop me a subscription, drop a comment, etc. Interact. Again, I'm a very small fish in a pond of many, many, many other people that you could be watching and listening to, and I greatly appreciate your eyeballs and your ears for any amount of time that you're here, and I hope I can provide value to your trading while you spend some time with me. Now, for the bull side here, you are breaking that red SAR here which could be a bull side move. And if we're looking at our level 2 here, you got a decent wall. You got about 69,000 shares parked at 140-150, which is where I might want to open up a few more. All right, I'm gonna grab a few more, but I'm not gonna change my average or anything. I mean, obviously my average is dropping, but I'll manually calculate my gain at 161. For context though, if you care, my average is at 156. So we'll see here, they're eating this wall though, this 140-150 wall. You can use your level 2 here, gives you an idea of what the bid in the ask side looks like right now. But it's a decent wall though. Is at 69,000, at 26,000. Again, any big fish come in and eat that at any point in time. So it could just get blown out, but it gives you an idea of where, and it's nice to see sellers show up around my LOI up here, because that's indicative of it being valid, right? It's indicative of it being some level of a resistance here. But again, I'd rather be a bull above it. I'd rather be a bull here. So it is a little catch-22 here. We're farting around it. We haven't gotten any continuation over the high a day yet. And I'm sitting pretty happy with my average here. So I think if I'm patient, we'll see it follow through here. Check the 5-minute. Yeah, the bulls would have to get this going sooner than later. The longer we chill around up here, so the longer we sit up here, if we sit up here for another 5 to 10 minutes, this is going to mean revert to the downside. The bulls want to push it like nowish. Pretty soon. Pretty darn soon. SPY rechecking on that. We're now kind of getting continuation here. Volume's getting worse. VMA dropping. We're under 100K on our VMA, so be mindful of that if you are trading the market. We do something called Morning Thoughts over in our Discord community, where I basically give you guys an idea of, like, kind of like a weatherman would give you a weather report on like what to look out for on the day, kind of like a brief little notion. And I mentioned how volume on the market could kind of dry up. We could see a little bit of like choppiness with lighter volume, and that might be what we're starting to see here a little earlier on in the day. Even though we're pushing towards high, I'd be concerned with this volume, especially in the last like 5-10 minutes here, much lighter as we're pushing highs. So if I'm a bull, I want to see the highs get pushed with more volume. I want to see increase. And if I'm a bear, I obviously want to see volume dip down as we push highs. But you're looking like you're getting a little bit of a pop here. NVIDIA wicked below the LOI, came back up. Now we're fighting around it. Let's zoom in a little bit here so you guys can see a little clearer if you're watching along. My contracts are almost green. Like I said, I have a 156 average, but I will track my original lot at 161 just to be fair. And let's see us get a nice yoink to the downside. If we break under, so what I'd be looking at here, you're obviously making higher low, higher low. Watch right under here. So the low of this little section here, 141.06. Get that to break. That's right in line with your green SAR as well. And this also lines up with the 5-minute starting to lose a little steam here. You'd close under that wick on the 5-minute and you'd be under POC as well. So it'd be a decent push down for about a 70 cents to $1, depending on follow through and volume. So it's still good risk to reward here. What I hate about NVIDIA is it can go, I mean, it could really go either which way just because of how it is, but I think the risk reward definitely favors the bears. All right, we're breaking under that low. Now I'm back at my original lots entry. Now green at 165. Watch the low of this candle here. Keep things super simple. Remember, this is where we closed out that original short from earlier. So watch the low, or at least where I went to runners. Watch this general area. So watch between 140.56 down to the wick of this candle, 140.31. Getting a nice little push here. And see if we get back to that range, and breaking that range, like I said, will bring us to that 140. Under that 140, we go to that 139, what was it, 50, 60, 70? What was it? 139.50-ish area. So good opportunity for these to go in the money if the bears can have some follow through here. You're also going to want to watch your 50 MA on the 1 minute. That's right around that range I just highlighted, where bulls could try to catch it here as well. So we'll see here momentarily. Let's check in on the SPY as well. And after we wrap up this trade, guys, I'll probably free you to your devices for the rest of the day. Oops. So if you did add when I added, just manually calculating things, you got about 7% if you're on the original entry, 5%, 4%. So fluctuating a little bit. Good volume on that last 1 minute candle here. You're getting 4 in a row here. Getting some wicks developing though, so bulls are trying to push up on it. Volume's a little iffy. Watch SPY losing that high, that after hours high from yesterday. Green SAR here is right here as well. So there's a case here for a bear reversion back to basically the chop range on the day. Getting south 192.95 in between 192.65 is likely if we crack under, I mean, it's such a small range, 193.39. You're risking like 40 cents here. All right, NVIDIA, it's time to die. Time for death. 50 MA is creeping up though, so you're going to want to watch that from a risk perspective. Again, I don't like to overstay my shorts when I am short. In fact, I'll take a little off the table here, which is only going to be a 4% gain from the original entry. But if you did add more, it's roughly a 10% gain. Sorry, I mathed that wrong. Hold on. Math. There we go. Sorry, 6% gain. So somewhere between a 4 to 7% gain here. It's nothing fantastic. Just looking at these wicks here, it could be indicative of bulls trying to step in and purchase. The 5 minute does not look too happy though. The 3 minute also does not look too happy. I think if you're patient on this, you're going to get a nice little yoink. But I'd rather be safe than sorry and de-risk a little bit, especially when it comes to semiconductors. I hate trading semiconductors. And if you're in our community, that's something you know about me. Me and semiconductors are like water and oil. We do not get along. For whatever reason, good, bad, indifferent, long, short, we don't get along. We just don't. Guys, real quick little poll while we're waiting to see how this trade plays out. Are you liking the stream today? Meaning, we did something a little bit different today where I wanted to mix, if there was an opportunity, which we're seeing there are 2 opportunities so far, mix in some live trading, but also with like more of a segmented approach like we did with the AVGO stuff. So do you guys prefer that, or do you guys prefer having like strict segments that we break up? I'm trying to test things out and see. Some days I think I might just do a live stream of just trading. Some days I'll focus more on the segment stuff. And I want to try to be able to, again, provide value to all of you in different ways, where the segment information that I give you guys is typically stuff that's more like long-term on the daily chart kind of thing, where you can kind of sit and think with it. Whereas the day trading stuff is obviously right now in the moment. And I know my viewership is split between some people who are both day traders and investors. Some people are just investors. So let me know what you think. Do you like, even if you're an investor, do you like watching this stuff where you're not day trading, but you can at least maybe pick and choose and learn from this stuff and apply it to your trading? If you're on the flip side of things, as a day trader, would you prefer just only seeing day trading, or do you like seeing some of the longer term outlook kind of stuff? Let me know in the chat. I appreciate it. I didn't ask for a number, but thank you for the ones. I assume that means you like it. I assume the ones mean that you like everything, so thank you. Because typically I say ones in the chat if you like something, so I assume that means you like it, so good. But I just want to get a feel on like what you guys prefer. And I'm going to do what I want to do, but getting your feedback obviously helps kind of get an idea of how I want to target the channel for you guys. Deliver content in certain ways. I'm also thinking about doing a nighttime stream, so like somewhere between 6 or 8 o'clock, not today, but doing like a prep stream. I know a few of you expressed interest in that, but having a prep stream maybe on like a Sunday night, kind of thing, or even before a major event where we can kind of talk about things to look at when you don't have the pressure and you may be more focused. You're not necessarily looking at a bunch of charts and you're actively managing other positions. I think that could be very advantageous for a lot of people. So that's something else that I'm thinking about and trying to figure out when the best time to do that would be. Man, NVIDIA is just sitting here. Love learning day trading. I don't do much. Okay, nothing wrong with that. You know, whatever you're applying in day trading, so like when you see me like reading candles, talking about volume, looking at indicators and stuff, you can take that same information and plug it in on like swing trading. Similar, similar thing. Just plug and play, right? Would love a show that talks about international equities and opportunities. Not all the time, maybe once a month. Interesting. Okay. I don't hate that idea. What I think is, I know you, specifically Dead Money, because I know of you. You're someone who would have good focus in that. I feel like the large majority of the audience probably wouldn't have a lot of interest in that, unfortunately, unless we're talking about equities that are like ADRs or equities in other, that trade on other indexes. But if we're only talking on international opportunity, like international equities that trade like solely in like, the Hang Seng or the Nikkei or whatever, however you say Nikkei. Can never say that. The Japanese index. People don't have that kind of exposure, or they don't have the means of doing that. You know what I mean? Ooh, WiMAX. We can talk about WiMAX. Sure. I love selling options and spreads, so hoping you'll get to spreads eventually. I have a video on my YouTube channel for our members of our community. I probably won't alert a spread live. Maybe we'll do maybe I'll alert some swing trades live at some point. But we could at least talk about spreads. I could make that a segment. We did the TA with AC segment, which was the technical analysis with Atomcash. But maybe we could do something that is like more options oriented, where we talk about specifically like breaking down how a strategy could work or how you could utilize it. I wouldn't mind doing that, kind of like an educational stream or whatever. Both because I like your guidance and thoughts behind the trade. Thank you, Brandon. Appreciate the nice words. Yeah, appreciate the feedback. So Dead Money says, how about WiMAX? I don't want to pump WiMAX, but I do like WiMAX quite a bit. I think the way I personally like to look at WiMAX, and if you're someone who's more of an investor, it would be a fund that I would consider you look into. And read the prospectus. Before you invest in any fund, you're going to want to read the prospectus, understand your expense ratio, understand what they invest in, and make sure it's the right for you in general. But I like WiMAX instead of buying real estate, if that makes sense. I would rather put money into WiMAX than put it into real estate. That's how I look at that. Now, you could write off certain things. I'm going to close the rest of my NVIDIA here. Which it's basically going to be a scratch trade for me. Because now it's possible it's going to push to the upside, and I don't want that exposure, and I don't like to overstay my short, so it's mostly a scratch trade. There was opportunity there. You got 4 to 8%, so made a little gain, made a very tiny gain, but I'll call it a scratch trade. Anyway, I like the idea of WiMAX specifically because it's going to give you a weekly income and a diversified portfolio. And I like that more than, for example, a rental property where you're going to put money into a property, you now own the property, and now you would collect rent, but then you also have to worry about tenants and upkeep and etc. Where WiMAX, you are paying a expense ratio, like you're paying for the manager to run the fund, essentially. But you're also diversified, and the amount of money that you're making, so for every share you buy, in theory, if you're assuming a 16% weekly dividend, you would make your money back on that share within roughly a year and a half's time. Again, that's not including taxes. So if you are doing it something like a Roth IRA, that's fantastic. But even with the tax implication, I actually sat down and thought about this the other day because it's something that I've looked at personally where it makes more sense for me to, and lower risk and less headache, for me to put money into a fund like WiMAX versus buying a rental property, and getting less return as quickly, right? Because sometimes you may, let's pretend you buy a rental property. I don't know where you're going to get one for 100K, but let's pretend you buy a rental property for 100K and you get, simple numbers, $1,000 a month. That's 12 grand. Let's assume nothing happens and no taxes or whatever Nothing bad happens. It's going to take you 10 years to get your money back. That same 10K, again, theoretically, in YMAX, you're going to get your money back within 18 months. Again, all in theory. No taxes and other BS. So that's how I like to look at things from a risk perspective and how much it's going to suck up my time. My time is valuable. I do not want my time getting sucked out of me. So if there are ways where I can avoid time suck and also make more money theoretically, that's something that interests me. Plus, you own the asset as well, so you can sell the shares, obviously, while you're collecting the dividend. You could sell the shares into the market versus worrying about selling it on the market, getting a real estate agent. It's just a smaller headache. So yeah, I like YMAX quite a bit. Thank you for the question. All right, guys, it is 10:41. Great analogy about rental comparison. Bonus, you get automatic exposure to whether... Yeah, exactly. Yeah. So that's what I said. So if you are interested in a fund like YMAX, you're going to want to read the prospectus, because that is a fund that sells options. So if you like option selling, look into this. On other... So it is an umbrella... It's a fund-to-fund, they call it. It is an umbrella ETF that owns other ETFs in the umbrella, and all those individual ETFs are selling options on bigger names like Palantir, like Dead Money says. Palantir, Carvana, MicroStrategy, or regular strategy now. So you get the income from all these different names, especially if one of them is an outlier with higher IV. But you de-risk because you're diversified within the same basket. So that's what's cool about it. Anyway, I'll stop talking about that because I know there's probably just me and Dead Money that are probably interested in specifically YMAX. But no, it's something if you are someone who likes to sell options, or you want a little bit more diversity in your portfolio, especially if you have a Roth IRA, I would definitely consider looking into that and having that as, if you are someone who's debating on buying a rental property especially, it is a very interesting proposition for the time in which you will recoup your initial investment. I want to say that very specifically. For the time in which you're recouping the original money you put in, which, rough math, assuming a 16% dividend per week at a roughly $13.50 share per share valuation, you're getting your money back roughly in anywhere from 1 year to 1.5 years, which is faster than you would on a rental property. Again, depending on your taxes and other things all in the mix. Just another thing to expose yourself to if you like that sort of idea. Anyway, guys, it is 9:43. Went a little long, but I don't care. We had a great time today. Had a great stream. If you haven't already, before you take off, drop a like on the stream. I will be back tomorrow at 9:15, and for tomorrow's show, tomorrow morning, we're going to do one of my favorite segments. We only did it once. I'm excited to do it again. It's called the Heat Check. So basically, I go on social media. I go on like StockTwits, etc., places where people can hype up names, Reddit. And I'm looking for anywhere from 2 to 5 names that are overly hyped right now. And if you want to, real quick before I end the stream, feel free to drop a name in the chat that's like hyped up that you're interested in. But I want to look at these really hyped names, dig into why they're hyped up, look at the chart and see if there's any substance to not only the hype of why it's hyped up, but if the chart looks good, and determine if these names are either bullish or bearish. That's a really cool segment. That's going to be tomorrow for tomorrow's show. We're starting tomorrow again, same time, 9:15 in the morning. I hope to see you here. And I'll probably record that Heat Check segment. So if you miss out, check my YouTube channel. Make sure you're subscribed over there. That way you don't miss anything. Have a great day. Make fantastic decisions for the rest of the day. And as I like to tell you guys, some say you will need an edge to trade. Well, I like to look at things from a different angle. And that is always what you'll get right here on the Atomcash angle. Have a great rest of your day. And remember, precision beats prediction every damn time. See you tomorrow at 9:15.
The time has passed, and that's a wrap. You're armed with the angle and your plan of attack, while the show is at an